Fibonacci profit targets make very good places to consider exiting your trade. What I typically do with my own trading is once I get into a trade, I will draw my fibs on there, and actually I do it before I get into the trade and use that to decide whether the trade's worth taking or not. And your profit target level is a great place to, at the very minimum, exit half your trade. So a lot of times we miss the first move of any trend. You can see the euro dollar is going sideways. It's underneath its hourly moving average. Volatility is absolutely abysmal. You have a narrow range 7 pattern which tends to lead to trends, and then it breaks out. And you can see it shot up a lot of pips. You just hit Control F for Fibonacci, or hit the T tool up here in the Fibonacci Draw Fib tool. Left click, hold it in, let go of it right here, and this makes very high probability place to get out of the trade, and especially if you draw it right. Let me make sure I did that. And you can see the market came up to this level and slightly above it. In my experience, most of the time the market doesn't go beyond the 1.618, and especially when it goes above our 2.0 white containment band, or there's a longer term Fibonacci profit target there. I do that analysis each night for about 30-40 minutes, and these dark gray areas are Fibonacci profit target levels drawn off of longer term swings, and sometimes they line up where the previous wave is. And you can see that the market, found this area and pulled back a little bit. So later, let's just say you started trading last night and the market pulled back and it kind of went sideways right here and broke out. This is a great place to use for profit targets. And sometimes you can see the 1.3013 area is right near the 10-day moving average, but underneath there's only 10 pips away right here. If you bought that breakout and the market's going up there and it kind of runs out of steam, you might want to exit half your trade or even all when it hits your trailing stop, pulls back a little bit, goes sideways, breaks out again. Typically, the market will either double top or go up to these fib areas. And when it gets up past the 1.618 and kind of stalls, great place to get out of the trade. You can also use Fibonacci areas on longer term charts. For example, from the 29th to the 30th here, you have a two-wave move up. First of all, look at this. Look where the market kind of stalled, right at the 1.382. You can also draw it on this, and the market, ran into some trouble there around the 50 area. You also have this wave from here, probably to right about here, and the market's really running into some resistance there at the 1.618 of that. The bigger the pip swing move, the more likely the 1.382 and especially the 1.618 is going to be some resistance. I wouldn't buy this right here because the next profit target's only a few pips up, about 10 or 14 pips. It's likely to run in some major resistance right here. So it doesn't make any sense to trade a currency where you're likely to only make 10 or 12 pips while risking 10 pips. Always take trades, and I've always said in the past 1.5 times bigger potential likely profit target than your risk. But new traders should focus on trades that are 2 times bigger potential profit target than risk, and to counteract some of the dumb trades you do that based on inexperience that you're likely to do. That way you have some bigger wins, and mathematically your odds of success go way up. Let's look at some other currencies and the Fibonacci profit target. Most of the time you're going to use it intraday, and so you can see the previous little sideways range from here to here, and the market also hit that Fibonacci profit target level as well. Let's go to a different currency and check out some other ones. Australian dollar made a big move up today. You can see it also found major resistance at my Fibonacci profit target of the previous night. Let's put that on here as well. And we'll hit the minus key to zoom out a little bit, draw our fibs from this low to this high. And most of the time the market's going to find some resistance, major resistance at the 1.618. In this case it went slightly above it because of how strong it was, and it was at my Fibonacci profit target level. These tend to act like magnets. If it's only a few pips away and the market shoots through the 1.618, really you can make a few extra pips. This is about 13 pips away from the 1.618, but when it starts going sideways, and specifically when the strength starts to fall, you want to get out. Look at this as you go sideways right here. Dramatically is losing strength, going sideways. It's above the white 2.0 band. It's at my Fibonacci profit target level from last night. Very likely to run into some problems here. And as you notice, the previous big swing right here, the market's at this zone. This was the first zone right here. This one was a little bit higher above it. A lot of times at night, if the market makes a big move, I might draw a fib off of this to get an idea of where the market could run into resistance. And I'll take those trades up into about 1.0364, and I'm not going to buy it above there. I want to see it go sideways for at least 3 to 5 hours above here. Then if it breaks out, I'll consider buying, but I would prefer it to pull back. We'll have a separate class on Fibonacci retracement levels, but you draw your swing on the whole move up. And because it's so strong, the stronger the move up, the more likely the 38% level is to find some support. If it comes down here and goes sideways and breaks out, I would buy that. If it just comes down and touches it, I'm not going to buy it. Typically, I like to buy the 50%. That's my favorite. If I lose on that one, I'll wait for the 62. If it goes sideways there and can't go underneath it and starts to go back up, I'll get in. And typically, if you have a loss buying at the 50 of 6 to 10 pips, you'll get that back when it hits 1.618. A lot of times people are busy with their jobs, families, life. You can't watch the markets all day long, so you can just simply draw a regular line on your chart, right-click on it, create an alert, and let me bring this box up here, and have it go to your cell phone. If you put in your cell phone address, I'm just typing in some numbers here, you can get a cell phone alert when the price comes to your area. Wait for price to come to your area, and you'll do a lot better trading. New traders are very impetuous. They feel like they have to be taking trades at all times, and they have no discipline and no patience, and they make a lot of stupid trades out of boredom, impatience. They feel like they have to do something. Unlike other areas of life where being proactive tends to do very well, hardworking, ambitious, proactive people tend to do well. In trading, it's not necessarily an advantage. Patience, discipline is much more an important traits to have for trading. So set your alerts if you don't have patience or discipline. In the past I haven't, so that's why I put these tools in the software for my own trading, and hopefully they'll work for you as well. I'll use one more analysis for Fibonacci's. We'll look at the dollar CAD. And again, notice how my Fibonacci profit target levels, especially when they're underneath the white band, tend to come into play, and there tends to be resistance there. But the first wave down, a lot of times strong trends after going sideways for a while and not, very low volatility, rectangle patterns. When the trend does continue, it typically goes at least 2 waves. So here's the first wave down, and it kind of went sideways right there, came down to 1.382. Anytime a Fibonacci profit target level lines up with other support resistance, they tend to be more powerful. This is the previous week's low, which is a major support area in itself, and then went sideways there for a couple hours and then broke down again. If the fib area right here is very close to the other one, you might, and you think it's going to continue its trend, you might redraw that last line down to get the new Fibonacci profit target levels of this entire move. And you can also, equally viable, I never draw them on swings less than 25 pips. So this one starts around 60, comes down to 30. That's a 30 pip move. And typically the 1.618 is likely to be resistance, but if you want to, see this area, it comes down. Notice it went sideways right here for about 15 minutes. You want to exit half your trade and then use the trailing stop for the other half. You would have got out at 90 at the second half and 98 on the first. You only made another 8 pips by holding. So at one point, you really can't go wrong by exiting at least half your trade at the 1.618 fib.